Oh, hey, happy Thursday. Hope you're all doing well. Let's dive into an outlook. See what's going on for pound US dollar. Yeah, got a little bit confused there. I forgot what day of the week it was, but yeah, we move. So yeah, when we look at the weekly chart, we can see we are continuing to the downside. So our initial kind of idea when we are looking at the weekly range that we're in, Monday being the high of the week, probably pretty probable. Really, if we kind of just zoom out a bit, we're interacting with this supply range here on the weekly, which is coming from a flip, and it's also part of this larger chain. All of this internal range liquidity has been taken out. So, we've been anticipating that we could very well bounce off of this and continue, but this could actually lead to a larger pullback here on the weekly, something like that. And then if we are going to move to the upside and continue that, could continue from there, or, if we just kind of scrunch up the chart, we can see we are pretty bearish, so we could start taking out some of this internal range liquidity, but we're talking about like 1200 plus pips, so not anything we need to get too excited about just yet. But things to keep in mind. We could also, just to play devil's advocate, we could have a bearish week that stays within this weekly demand zone and then start to move to the upside as well, take out this high, interact with this zone a little bit further. Who knows, even take out structural liquidity, tapping into maybe this wick. But I don't want to speculate too much on the weekly chart. I'm more concerned about what's currently happening, in these last few candles, just relative to what's going on. Because I'm a day trader and I'm really only focusing on taking trades that last for or are contained within the day. But let's take a look at news today, because we do have some important stuff to take note of. We have CPI at 8:30 this morning. So we have core CPI month over month, CPI month over month, and CPI year over year, and as well as unemployment claims, which is a weekly news event that we see. So if you don't know, core CPI month over month is the change in the price of goods and services purchased by consumers, which is going to exclude food and energy. Our forecast for this month is 0.2%, with it previous being 0.3%. So we're forecasting a slight decrease from last month. And if we look at the usual effect, actual greater than forecast is good for the currency. So obviously our forecast is less than previous. So if we kind of fall within that, we're already kind of seeing a slight weakness to the overall US dollar. And we just kind of look at that in the price of the goods and the services purchased by consumers. And we can kind of figure out why that is the case. We have CPI month over month, which is like core CPI, except it's going to include food and energy. So that's the little difference there. If we look at the forecast, 0.1% for this month. Last month was 0.2%. So a similar theme across both, where we're kind of anticipating a slight slowdown there. So we'll see what kind of comes with that. And then CPI year over year, exactly like CPI month over month, except we're measuring last year's CPI to this year's. So 2.3 being the forecast and 2.5 being the previous, meaning across the board for CPI, we are expecting a slight decrease from either the prior month or the prior year. We do know actual greater than forecast is good for the currency. So obviously if we hit 2.5, we hit 2, we hit 0.3 and 0.2 and 0.3, that would be good for the US dollar. That would be above forecast and would be good for the US dollar, which means, all things equal, we should see pound US dollar move to the downside. And then finally, we have our weekly unemployment claims. It's the number of individuals who filed for unemployment insurance for the first time in the past week. We have a forecast of 231K, with the previous week being 225K. So that's an increase of people who are filing for unemployment insurance for the first time during that past week, which is not good for the US dollar. Obviously, that's more people who are collecting from the unemployment system, meaning they don't have a job. This is a bit of a lagging indicator, because not everyone will collect unemployment immediately. They'll get severance, things like that, depending on how they exit their jobs. So so that's 8:30. Just be mindful of that, because that's going to definitely kind of take us out about this little bit of a range that we've been in, because as we can see, this week has been pretty low momentum. If I go straight to the 15-minute toss on the market sessions indicator, this is something I put into a comment I made on my end of day markup. But if we look at the relationship between New York session and London session, at least for the past few days, we can see that New York has sat within London session. 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 New York session has sat within London session. Typically, you know, we'll see if London is bearish, we'll see a continuation to the downside. London's bearish. This was kind of a double break of Tokyo, but it doesn't really matter. We still get somewhat of a bearish, or at least we break the lows of London session. We see kind of that continuation, whereas this week we can see that slowdown in momentum. There's a couple different reasons for that, really. I'd say the biggest one is that the market is waiting for things like CPI today and PPI tomorrow. Also, you know, just more specifically, we are trading into weekly demand, so there's going to be a lot of interest at this level to, you know, kind of hold price and potentially move it this way, or, you know, break down. So, you know, that's something to also consider. And then if we just kind of go up a time frame, we have been sitting on this weekly open, or weekly close rather, weekly low. Weekly, no, it's not a close. Apologies. But yeah, we've been sitting on the prior week's low pretty much all week. As we can see, we push down, we push right back up. We get down into it, we push right back up. We go down into it, we push right back up. We break down into it, and we're pushing right back up. So it does show that there is a lot of volume that rests below the prior week's low. And this is something that I've talked about in all of the top-down analysis videos, as well as in the Blueprint series. Just the relationship between, you know, the highs and the lows on the higher time frame, and the fact that there's a lot of liquidity that's going to rest above and below those points, you know, regardless if you want to admit it or not. There is, because everyone is looking at the charts in a multitude of different ways, and as long as we kind of understand that, it gives us a better way to view this stuff. But yeah, let's dive into some edgeful stuff, and just kind of see where some statistics and data can kind of put us, if I can alt tab correctly. So we'll start with the previous day's range, which is, if I change this, actually, we'll just do it the full day rather than New York session. So currently we're an inside bar, but I think we all know that by 8:30, we're going to either break to the upside or break to the downside, depending on where the news results come, you know, that actual to forecast. It's going to kind of play a big part in it in the actual news release. So if that's the case, you know, we have our statistics here. If we break the previous day's high, 75% probability that will continue and potentially close bullish for the day. Or if we break the low, we have a 68% probability we will close bearish for the day. Obviously, we're kind of a little bit more poised to be bearish, at least, you know, kind of just looking at the overall analysis. It does make sense, but that comment I made about the prior week's low and the fact that, you know, we're just resting on it. That was Monday's candle. It's actually the low here. Just to kind of articulate that once more, you can just see how every time we touch that, we are seeing sensitivity and we're starting to move to the upside. So that could be an indication of bullish strength, or at least some demand coming into the market, but I think it's a catalyst for the news more specifically. So if we look at the high and low by weekday report here on Edgeful, we can see that, you know, the low, if we're expecting a bearish candle, the high of the week has a 40% probability of printing on Monday, which, you know, so far that remains true. And then we would anticipate the low of the week printing on Friday. Obviously, we can inverse that and just kind of look at how a bullish candle might shape up. And obviously, when there are fundamentals in the markets that are going to affect price action, this can skew the data, and we can get lows of the week on different days in a bullish market. So something to keep in mind. But if we just look at the last 6 months, for example, we typically don't see the low of the week being printed on Wednesday. It's about 9% probability. We don't see it on Friday, so we can just kind of scratch that out. So even when we're looking at this, if we don't have a particular bias, this can help us just kind of, you know, logically say, well, there's a high chance that this is going to be a bearish candle. Why? Because the high of the week has been printed on Monday, and we've just been kind of trickling lower. Obviously, there's a caveat of that: CPI, PPI, all these, you know, kind of events that can create more volatility in the market. And, you know, especially if it's not quite priced in, we can see some deviations from what we're anticipating there. But if we look at now the opening week range, because we are on Thursday, so we can go to the full report now, and we can kind of just look at the probabilities here. In the last 6 months, we have a higher probability of breaking the opening week low. So this would be Wednesday's low, because the idea of the opening week range is to look from Monday to Wednesday, kind of draw a box around it, or just a high and a low, which is what these blue lines are here on my daily chart. And this just basically sets out a range for the week. And the idea is, you know, we have a series of probabilities of, statistically based on the last 6 months, you know, a range being drawn from Monday to Wednesday, the probability of breaking the low or the high breaking both or staying inside the range. Obviously, we can see staying within the Monday to Wednesday range is pretty small, just under 8% probability. Same thing with breaking the high and the low, and this is assuming price action on only Thursday and Friday. So obviously, we only have 2 days to work with because the range takes 3 days to set. Obviously, if we go into customize, we can amend this and make it only on Monday, make it Monday and Tuesday. But as the week progresses, I think it's only prudent to start using the Monday to Wednesday, because this is where we start to see a more definitive kind of spread in the data. You know, these are the 2 top tiers of it, and then we can kind of just see out of total 26 weeks, 10 times we've broken the high, 11 times we've broken the low. So pretty similar. 3 times we've broken both sides, and 2 times we have broken or stayed within the range. So something to just keep in mind when you have it on your chart, because it doesn't really require too much things, but you also have kind of an idea of, you know, just all in its own right. We have liquidity resting above both of these points, and one side is going to be gravitated higher. The likelihood of doing both is pretty low, but obviously if you have things like NFP, CPI, FOMC, you know, the big ones, you could see that. But yeah. And then, so we'll go back down to the 4 hour, start looking at some price action. As we can see, not much has really happened on the 4 hour. You know, we've kind of interacted with this level of supply like we did on basically Tuesday, and then we started to trickle away from it on Wednesday. My visibility settings, I know they're there, so I need to get them off my charts. But yeah, so we came into supply, and then we kind of trickled down. We took out that Monday low, putting the low of the week on the Wednesday, and then we kind of stayed contained within this 4 hour candle, and really that's what we've been inside for the last several 4 hour candles. So basically this large candle here, that big drop that we've seen, was what we've been contained within, you know, this entire week. So I suspect, and I think we can all kind of agree to it, that we should likely see us breaking this range as a result of CPI later on this morning. So that's something to kind of be on the lookout for. So we're looking at, again, one of my kind of favorite edge flow reports, because it holds pretty true. You know, if we just kind of look at previous day, we broke bullish. We ended up closing bullish for the day. Maybe not, this week hasn't been as picture perfect if you're a New York trader, because you're kind of expecting, you know, continuation. This one's out of statistic, but if we look at something like maybe this one, this is like a perfect day. Bearish Tokyo session, we break the low, break and close below the low, and then New York continues lower. Even this one, we sweep the high, we don't actually break and close above it, and then we kind of slightly continue, maybe not the best version of it. This one's not too bad, but again, New York is staying contained within London, so us New York traders are kind of stuck right now. But if we look at, you know, this current Asia session, that's the relevance is today we have a bullish Asia session. We have broken to the upside, which we can see, broken and closed above it, but we are now approaching the low as well, so this could be a potential double break. But if we do look and just factor in that current break to the upside, we have a 75% probability that today could be a green candle. But obviously if we break the low, that also creates a 66% probability, so that kind of becomes almost unhelpful in a lot of cases. And then if we look at the Tokyo to London market session breakouts, we have a 50% probability for a single break and a 50% probability for a double break. So again, it's kind of a toss-up right now on what we could see this over the last 6 months. So again, not really super helpful for us, so we can't really bank on this statistic being right, especially, and this is more based on if we actually do break and close below here, because then we've broken and closed above and below, which means we can't really use this data to say, hey, there's a 66% probability of closing bearish or a 75% probability of closing bullish, for example, because we've broken and closed below and above the Asian range. So just something to keep in mind there. Doesn't mean it's going to happen necessarily, but then we can use this to see what's the probability of that happening, the double break. And it's a coin flip, basically, the Tokyo London market session breakout. So definitely something to keep in mind, you know, because we have basically, if we have a green London, if we have a green Tokyo, green Asia, which is what we have, we opened here, we closed here, bullish session. We have a 64% probability we should see a bullish London, but it goes without saying, currently we have a bearish London session. That said, what's going to be included in this London session, CPI, which if it is favorable or unfavorable for the US dollar, we could see a move to the upside, which then would allow this statistic to play out. It's only a matter of time till we find that out. And then obviously we can start to look at if we have a bearish London session, which is currently what we have, the continuation of New York closing bearish is pretty high, 72%. So it's just nice to be able to look at this kind of stuff and figure out what makes sense. And then obviously if we look at London to New York, we have a 59% probability we will see a single break, whether it's to the upside or the downside, which we could then look at this statistic to kind of give us maybe a little bit of an edge on which side we would suspect to break. And then we have a 0% probability of a double break. I mean, just looking at this, we've been contained within the London session for almost the entire week. And then with 41% probability that we'll see no breaks. So a lot of good data there just to kind of give us insights on the session correlation and, kind of just looking at one over the other and how these can be used to just give you a little bit of an edge in terms of direction, which I think is super important and why those tend to be kind of my favorite reports. Being a Forex trader, trading currency, we do rely heavily on session-based kind of analysis ideas because we're playing off of the 3 market sessions. Whereas if you trade something like futures and you focus more on the real-time hours, the actual New York equities market times, you're only focusing on one session. Yeah, you can, of course, factor in the electronic hours in your analysis, but sometimes that's not as helpful depending on how you trade. There's all kinds of things you can factor in, but less important. But yeah, let's dig into the M15 and then we'll wrap up here. So yesterday, as we can see, we kind of swept down. We took out that low as we talked about when we were coming into the outlook yesterday. And then we had kind of demand chaining here. We had the last point of supply. That failed. We also seen supply kind of fail here as well. We came down into basically this big demand range, started to kind of create a demand chain. And then once we interacted with this extreme supply, because essentially we were trading from that high to that low, when we interacted with supply, we've seen demand fail. Then we saw supply holds. We continued moving to the downside. So anyone who took shorts from here was very happy. This was definitely the trade of the day. And there were tons of people in the community who caught that trade, all for the exact same reason. So whether you went in and traded on a 1-minute execution model, that was a nice flip model to take entry on, or if you traded more of the momentum entry, you could have did confirmation entry. Probably not the best idea to use a confirmation entry because this candle doesn't necessarily scream confirmation. Get a nice zone sweep, which was the liquidity for the trade. But I think the momentum entry stop loss here, kind of looking here, your idea would just be, does demand show up at all in this zone right here? Because obviously we can argue that this was also a sweep of structural liquidity. So if demand wants to step in, that would be kind of where it would, kind of like that. If I get rid of these points, maybe you can see it a little bit cleaner. But basically something like that. But the thing to note is when we swept, what ended up happening? We traded right into supply, and then we continued to move lower. A lot of momentum in the market. We do see that demand did try to hold, and we just kind of see corrective price action. And then we start to see this buildup of a further move to the upside. Let's get rid of all of that and just start to kind of build on that idea, because if we look at this, we do see supply holding. We come down. We kind of are holding into demand. So if we do kind of build off of this idea just really quickly and kind of look at this, say, okay, well, that failed. It swept, but we never actually broke and closed below it. We're grasping at straws a little bit. So we're saying, okay, well, demand's not really holding, but there's no real supply in this. We could argue that there is some supply that was kind of formed here, which as a result, let's just move that. But it's not really like a flip or anything. It's more just a standard zone. And, it doesn't, everything's kind of messy. Like if we look at the high to the low here, our ideal analysis would be to move to here because really there isn't much. Yeah, you could argue that there's demand right here. Initial reaction, extremely reaction, like in failure. And that creates a bit of a flip. That's flip gets swept, and then we start to push down and break the low. So, if you looked for shorts here, I could see, to a certain level of understanding on why that would be. But of course, if we look at the time of day, it's at 4:30 in the afternoon, meaning that you're going to fight rollover and then basically Asia session. And then what ends up happening in Asia, we just kind of trickle to the upside. We take out this structural liquidity. We can see that supply just doesn't have what it takes to kind of move the market to the downside. We kind of just tap into demand, because if we look at the way this is forming, this is basically just a demand chain, which does look synonymous to internal range liquidity. And as we can see, we are starting to sweep it. We've seen momentum kind of step back into the market. We'll get rid of all that. And if I move this to here, this gives us an even better idea, because yesterday we were kind of using this range to justify this reaction, because if we were looking for shorts, let me put that back. If we were looking for shorts, because order flow shifted potentially bullish here, we started to see demand holding. Any shorts right from here were counter order flow. So when we came into here, these would be more unconfirmed shorts. And I believe I talked about this in the outlook itself yesterday. And then when we came back into this is more of, and this is why this was such a high probability trade. This is a confirmed order flow trade. So basically we're trading H4 pro trend, bearish idea, and the 15-minute order flow is also bearish. So we have confirmed, we're trading with the higher time frame order flow and trend, and the M15 order flow has also aligned with that idea, making for a really great trade. So, if we kind of take that aside and say, okay, well, we didn't really get that first kind of respect or good respect in theory, then in theory, you could say this was unconfirmed based on that kind of notion, because we never really came back. So this was counter. This would have been more unconfirmed, which means this would have been your confirmed. So if you took any shorts from here at London Open, at least targeting here with a larger target of this, that's pretty good too. And then we have this as well, which, you could argue demand's starting to kind of take control at this point. You see this demand chain, and as we come in, this breaks. This could, depending on how you want to view it, this could be counter or at least unconfirmed in that respect. But if you kind of look at the range you're trading, in theory, high to low here, because we broke down. Yeah, I mean, even if as I say that, I'm like, well, no, because you're kind of still just trading in this leg, and this is more of a range. Like really, if I just zoom out on the M15, we are just stuck in that range, which is synonymous with what we see on the daily chart here as well. The market's not really moving, and the reason why that is, and we see this all the time, is the fact that we are interacting with a weekly level. So demand and supply are fighting for control. One side is eventually going to take control, but the problem is, because it's a higher time frame level, when we look on the M15, we will typically see more ranging price action, seeing that fight for control. Overall, we can kind of say that supply is kind of winning right now. Like every time that we create demand chains, they get swept. The lows are getting swept, and then start creating, void here, liquidity here. We're kind of just filling voids. Like if I just take all that back, we create a liquidity void here, create a liquidity void here, one here, one here, one here. And if you've been hanging around Phantom for any bit of time, you will have heard me say, follow the Dorito. That's pretty much what's this has been happening. And when we have this many liquidity voids, we can just kind of look at it being a range. So the one thing to note though with this range is, we can see that we're moving to the downside. We're struggling to actually make lower lows. Like we break and then we start to really correctively move back. We kind of just do something like this. Now we're starting to correct. So it is very synonymous with a range. And we should see some more movements as we enter 8:30, so about 15 minutes from now. I've been talking for a lot longer than I was anticipating, so I'll probably wrap it up there. I'm still pretty bearish on this pair, at least for now. Just looking at taking out that low of the week that's formed the opening week's range, and just a continuation to the downside. The order flow is kind of suggesting that. We're seeing the momentum to back it up as well. If we can... there's nothing that really looks good in here for me to sell from. Like, yeah, but I'm sure a lot of you would probably look at that and say that's good, which, you could argue it is. But sorry, coughing. But, I'd like to see something a little bit more tangible. Ideally, something that's swept liquidity POI, something, am I drawing this right? Yeah. Basically, if we did something like this, took that out, it's a little bit of both, and then we see that momentum drive, that would be great. Or, just something that's creates a flip. I'd like to trade from that. Ideally, those are the best type of supply and demand zones to really be trading from, is that liquidity POI or a flip. Just shows that either liquidity was swept or there was actual transactional order flow in the market. So this is interesting to see the move to the downside prior to the news. You know, we could see something like that. But I'm not going to really speculate too much on the news because I'll be honest, I don't know enough about fundamentals to really give an opinion on the actual CPI data that's going to come out. That would be something that you could talk all day to Kev about. But yeah, that about summarizes my thoughts here on pound US dollar. Hopefully it was useful. And more importantly, I hope you all have an incredible day on and off the charts. We'll see you inside the Discord. Cheers.